Okay, guys. We'll just get started. I'm gonna at least do a brief walkthrough, kind of what the agenda looks like today. We'll see how that it shakes out. Maybe a little shorter one, but obviously we'll just if we can get back to time, we'll give it back. So, um, we're actually gonna flip-flop these first two. So just FYI. So we'll start off with the FSWA Q3 and year-to-date portfolio return numbers. That's through the third quarter that we have, so through the end of September. So I'll run through that first. We're going to look at the FSWA portfolio location and advisor hub. So we have those up on the site now. We'll walk through kind of what that looks like, what information is available on there, all the capabilities on there, all that good stuff. I want to look at what's coming down the pipeline as far as the managed asset and esoteric evaluation. So we're working on a new evaluation platform that will help provide hopefully a good oversight as far as ETFs, mutual funds to begin with, and then SMAs we're going to roll out next. So that's coming down the pipeline. We're just going to walk through kind of that evaluation methodology and what's coming down the pipeline. Software updates coming out, a couple ones, and then a one with a winter conference update. So, Brian Castle, do you have anything you want to add as far as introduction to that?
No, I think it's a good lineup. We'll go most of the hour.
Okay, sounds good. All right, well, let's lead it off then. I'm gonna pull this over here. So, let me zoom this in. I know, and I'll send this out after. I hope to, and you'll see kind of towards the tail end of this, be able to put this kind of on the site, if you will. But still, that's going to be coming down the pipeline later, so you'll see. But so here's our Q3 performance numbers. So the third quarter here. So this is just for the third quarter, and as you can see, capital appreciation was probably the best third quarter I think I've ever seen, like an individual third quarter. We were up almost 14% on the third quarter alone, versus the S&P, which is the middle one here, 8.24%. Equal weight was up 3.20% in the third quarter. And the S&P 1500 was up 7.69. So you can see it over here. This is 2025 year to date as far as end of third quarter. We have a pretty nice lead. So capital appreciation made up a lot of ground. The last check-in we did, which was the end of the first half, we were actually trailing the pure S&P by about 3 points. Now we're leading it. So that was really good to see. Looking,
Chris, I don't think folks can see on the left what portfolios those are
yeah, here, let me
because
zoom.
we gotta collapse it down a little bit so they could see it. There we are. Okay. Okay.
The U.S. sectors. So you can see here strategic, moderate, tactical. Q3 here. We posted a pretty good one. We didn't quite keep pace with the S&P 500. That's to be expected with ETFs. It's pretty hard for us to keep pace. You can look here with the way the year's kind of gone. Strategic, actually has, since it's bounced back, it stayed at kind of, we got that full recovery. It's been the best performer so far. But one thing we are looking at rolling out is the value at risk kind of metric as well. I know Mark Karstrom, who's on our investment call, was kind of mentioning that as far as Sharpe ratio, things like that, because it takes into account drawdowns, that risk when we get there. So, but just looking at a pure perspective here, 14.42. So we're pretty in line with the S&P 500 from a pure perspective, obviously beating the equal weight and the S&P 1500.
Chris, let me make a couple comments on this. So it looks like the U.S. sector strategic fully invested is back in basically in line with the S&P 14.42, 14.83, a little bit behind. But the key is March and then for the first quarter. And when you look at March, the portfolios were down in the threes, where the markets were down in the fives, right? And that's the power of that rotation. When we got out of the market, we only got, roughly about half of the drawdown of the market in that period of time. So the U.S. sector strategic is in line. Tactical is off beat for a number of reasons, but U.S. sector strategic, that main portfolio is right in line with the S&P. But if you risk adjust that number, it's way ahead of the S&P because it took less risk to get there. And so that's something I wanted to point out. The capital appreciation model, like you said, Chris, is the best third quarter we've ever had. and we've run this portfolio since 2000, year 2000. We've run this portfolio. We have portfolio numbers for 25 years, and we've never seen a quarter like that. But once again, the key is that we didn't have as much drawdown. You could see in the first quarter, under capital appreciation was down 3 and change, and the markets were down 4.5 and 4.8. So the key is that we had less volatility, but then the capital appreciation model is individual stocks and has the ability, if we happen to pick the right ones and kind of get lucky at times, to way outperform. So you're not going to have a 13% quarter when the market's up half that in an ETF model, because they're never that unique, because there's a ETF is basically a basket of stocks that's an index of that particular sector. So you could have a breakout quarter like that in capital appreciation, and we talk about there was seven quarter period of time, or 7 quarters in 2017 and the first 3 quarters of 2018, when capital appreciation portfolio was up almost 25% over the S&P. That will never happen with an ETF model, but it can happen with a stock model. And so, and I think we'll see later on down the line, there's some good performance in the dividend stocks too. But go ahead, Chris.
Yep. Yeah, I mean, going on next, dividend income, another great outperformer. Q3, we had about what 2%, actually 3% alpha there, call it. Year to date, I mean, it's up 15.14%. Russell 1000 value is up 11.65. So both of our stock portfolios, great outperformance through the third quarter. Growth in incomes, it's another ETF portfolio, but we still had a nice outperformance here. The Russell 1000 value in the fourth was up 4.40%. Both growth and incomes were up about, called 6.70%. So nice outperformance there, and still, even though this is an ETF portfolio, we're about 1% ahead of the benchmark there, year to date through the third quarter. So that's great to see. One that's I really like to see is the dynamic allocation. So we were up 7.70%. A lot of that is because we do have a bit of commodities exposure there, and a lot of that's precious metals. So that was great to see. Year to date, it's still up 10.59%. So I mean, a little bit off, but once again, this one's always going to have a little bit, just with everything. It's never going to line up directly with the S&P 500, things like that. International has been the best performer year to date by far. You can see the year to date through 2025, through the third quarter, it's up 27.36%. You had a little bit of a slower Q3 up 5.41%. And that's relative to the Q1 and Q2 where they're almost up 10%. We saw a slight slowdown in international, but still just a great outperformance there. The couple more I'll highlight. Small caps, kind of right in line. We actually did beat slightly on this, and we are for the Russell 2000 and S&P 600. We don't necessarily keep pace on the upside as much. You can see the 2.22, and this one's up 3 and a 6 and a 9 here, but we really protect on that downside. That really does pay dividends. You can see here when instead of being down large amounts, we're able to kind of protect that. Index allocator. So we only have full pure numbers for the strategic. That was up 10.46. I know we've kind of modified that because I think it's not pure S&P 500, I think. So we've skewed it even a little bit more there. But yeah, I mean, you're going to get what you're going to get there. And then we don't have the moderate for the full year. You can see we switched a couple of them over to moderate. I believe in May was when we got first year full numbers. So we don't really have like the full year to date for that. MLPs tracking really well versus the Alerian MLP index, although for the year it's the returns are magnificent for this one. It's up 4.87%, but the Alerian index is it's about flat. So we have about 5% on that one. And then our taxable fixed income, this is where we lagged slightly. I think that's the one area where we don't pretend to be this is the best, but we're a little bit more kind of bread and butter here. You can see about 1%. We're still getting decent returns. We're not, we're more on the protection side, if you will, than trying to gain a point or two alpha there. Same with the floating rate to a degree. So, but overall, I mean, I think especially from our growth and where most people I would say use us probably, growth and value portfolios really strong year so far through Q3. And hopefully if we can continue this out and even match pace or not gain a little bit more in Q4, it'll be a really strong year overall. You want to add a little bit more, Brian, or?
Yeah, and so just to reiterate, so this year, the story of this year so far is international. And international is rallying because we have 37 trillion in debt and people are worried about the dollar. So the dollar has not been great. And that's why gold is up. That's why Bitcoin is up. That's why silver is up. That's why palladium is up. And so people are reacting to different things. But international, for the first time in almost 17 years, has had a sustained almost 8-month rally where it's beating US stocks. So that might continue. There was a period of time between 2000 and 2007 when US stocks averaged single digit returns on average for about 5 years. And international and commodities actually were up in the 20s every year, with international more than that. So we're seeing that kind of market right now. We'll see if it continues, but that's why then we managed to pick individual names in the capital appreciation that did a lot better. And that's why the dynamic was doing better, because it's got always has an element of commodities when commodities are rallying. And yeah, that's the story. So the third quarter was very, very good to us.
Mhm.
All right.
Yep. So yeah, I'm gonna send this out. I just gotta make sure I get all the disclosures, we get everything on it. But and then like I said, which after a little bit later in the call today, I'll show you the site. My goal is eventually to get all this even on that site so you guys can get updates. It will be monthly because that's when we can only do composite numbers, but we'll walk through all that. So but yeah, any questions or I know, like I said, I'll get this out to you guys. And the other thing that'll be nice is I know there's been questions in the past, how to invest in them, things like that. I'll show you on the site where it's really easy, and make it even easier for you guys to invest. So,
Yeah.
um,
Yeah,
okay.
and we use the portfolios in combinations where the dynamic is always a satellite rather than a core portfolio. So we'll use a U.S. sector, we'll use one of the two stock models, capital appreciation or dividend income, with a dynamic, and then kind of blend them together. We'll have 3 or 4 different portfolios for a particular client, besides their alternatives, of course. So so we don't put any one client in just one model. So
Mhm.
Yeah, Brian, along those lines,
yeah.
do you maintain a like conservative balanced or an aggressive balanced or some kind of a balanced composite as well, or
We
is that
haven't done that. We do each individual portfolio on its own, but we could do that.
Yeah.
We also going to do the risk adjusted numbers and come up with sharp ratios and things like that. So we're working on all that analytics right now with an outside consulting firm that's going to produce some of those numbers for us.
Well,
So
they have in Orion as well. They do compile that too. So,
yeah, so we could do a blended with U.S. sector. We could do a blended with one of the
do
stock models, Mark, and then make suggestions like that. Yeah, so we're gonna offer that going forward. But I mean, most advisors know how to create a blend on their own, but we'll try to make it, understandable. So
thank
yeah.
you.
Okay. All right. Well, let's jump back to the agenda then. Um, Next up, I
so
don't know if you want to kind of introduce them, but
sure,
featured
yeah.
protocol.
Sure. We have a special guest with us today that I wanted to chat with us, have him chat with us a little bit about private investing. And some of you might remember him from one of our conferences about 2 years ago. And his name is Jeff Carter. And Jeff Carter is a former member of the CME board, of the board of directors of the Chicago Mercantile Exchange. He's also a graduate of the University of Chicago Business School, and he was the founder of the Hyde Park Angels, of which I was a member as well. And Jeff recruited me as a member. But he's got more experience in alternative investing than most people have. And in addition to the Hyde Park Angels, he ran a company called West Loop Ventures, because the west side of the city, right? West Loop. And anyway, so Jeff, welcome to the 4-Star program today. Are you there, Jeff?
Might be muted.
I'm muted.
Are you muted,
Here
Jeff?
we go. How about now?
Excellent. There he is. Okay.
Okay.
You're wearing your signature pink outfit, Jeff.
How
That's
about it?
wonderful.
Yeah, I played a little golf here in Las Vegas this morning, so
Very nice.
yeah.
Well, good. Well, Jeff, thanks for joining us today. I wanted to, give everybody a chance to hear from you on what's going on in the private investing world, and then the angel world, and then how we can invest in it and everything. So, anyway, welcome to the show. And
Thank
Jeff,
you.
what is going on in the private investing world from your perspective?
Well, I think what, of course, we've seen is the private investing world is no different than the regular investing world in some cases where, people follow fads. And so,
Hmm.
we had, let's say, um, around 2019-ish and stuff, crypto was the big thing. And then that kind of went away. Um, so now it's all AI. So if you have a company pitch you, and they don't have any artificial intelligence built in, they're probably not getting money. The problem with that is most companies that are talking about artificial intelligence are using it as an add-on. It's not an integral part of their business. And so the odds of them failing are probably pretty high. And then with artificial intelligence, of course, it all depends on the data it's trained on. So when Kenny and I were running West Loop Ventures, we saw scads of trading apps that could pick bottoms and sell tops and do everything except slice bread. And our question was always, number one, what data are you trading on that isn't available to everybody else for stock trading or whatever?
Hmm.
And why aren't you launching a hedge fund? Because, as old traders, like if we had an edge on the market, we wouldn't tell anybody about it. So we never did invest in one of those deals. I did do a deal after the fund kind of closed and shut down, Contio.ai, which is a new meeting app that you can sign up for the beta. And that is native AI for meetings, unlike anything that's been out there. So I think the other thing in the startup thing that we're seeing is we're actually seeing crypto start to make a little bit of a comeback. Gary
Hmm.
Gensler and the Joe Biden administration tried to kill it and they didn't. And so it's starting to make a little bit of comeback. You're seeing highs, of course, in Bitcoin and stuff, but I think banks and traditional financial institutions are starting to embrace stable coins, they function just like a US dollar would. They're backed by US dollars, so there's no speculative stuff around it. The thing that's different is it uses crypto rails rather than, let's say, credit card rails or ACH rails. And so the money moves faster and it's way more efficient with less fee.
Hmm.
I think there's a lot going on in general. It's not my bailiwick, but a lot going on with regard to sort of clean energy still.
Hmm.
A lot going on with medical. We're at the cusp of just incredible stuff happening. It's almost like coming out of the Middle Ages into the Renaissance with the way that artificial intelligence is affecting everything. And from robotics, I mean, you see these crazy robots. We're going to have driverless cars, we're going to have driverless cabs. It's just incredible the amount of advancement that I think we'll see in the next 10 years. The, the hang up is going to be energy. Energy's costly and we don't have enough of it. Our grid is just way too small. So we have to figure out ways around that. But the other
Yeah.
thing seen, I think, is valuations along with inflation have crept up. So everybody thinks their company is worth, $14 million when in the old days it was worth six. When we started Hyde Park Angels, that same company would have been worth two back in 2007. So valuation creep, which in turn generates more dollars inside a round to own more of the company. And
Mhm.
so I've seen that. Good entrepreneurs understand where to price their company and how much money to raise. And so, but the trend is bigger rounds at higher prices.
Mhm. So you mentioned, yeah, crypto, and it does seem like crypto's making a recovery. Well, what do you see as the future of that? Will crypto really be money that's in our pocket, or are we going to divert to stable coins?
I think it's going to be stable coins for the short term.
Mm-hmm.
I don't think, ironically, Bitcoin's the headline thing. I don't think, Bitcoin's not programmable. It's just a spec instrument. Um, I do think that you're going to see tokenization of real estate to make that
Mm-hmm.
more efficient. Maybe it can
Mm-hmm.
price out quicker.
Mm-hmm.
I invested in a company called Open Finance where we did tokenize real estate. We got through the SEC process. And as soon as we did, the SEC ruled that we couldn't trade it. So that kind of killed that company. Um, we actually sold it for 1x to another Israeli company. They bought the licenses. So we got our money out. But um, the other thing with regard to crypto that I think is going to happen sooner rather than later is Ethereum and Solana allow programmable crypto. There's one other one I can't remember, but I think you're going to see those replace contracts,
Mm-hmm.
especially over-the-counter contracts and things like that,
Mm-hmm.
because everything can be programmed in with verifiability and all that stuff and then automatically settled rather than, me go to Goldman, I hire a bunch of lawyers and accountants to do the diligence and all that stuff. Then I put up margin money, Goldman settles it, takes money, pays, collects, blah, 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 blah. So
Mm-hmm.
I think that will happen. Um, so that's where I think it'll be stable coins, um, sort of OTC, Ethereum, Solana contracts, and then tokenization of real estate, I think will happen.
Interesting. Yeah, and tokenization does seem like it's going to create efficiencies in markets that are not efficient. So that
Right.
could change those markets, couldn't it? That could change them
It could, it could
dramatically.
just, it could just make, it'll just make capital flow more efficient,
Um,
and, for years, the crypto fanboys have been talking about disintermediating Chicago title, right? Or something like that. Well, tokenization could do it. So, we'll
mhm.
have to see. But it all hinges a lot on the Clarity Act passing Congress, which is making its way through. The first part of what Trump promised the crypto people that he would do, he passed. Now
Mhm.
they're working on the second part, the Clarity Act.
Mhm.
And so that needs to pass. I think David Sachs is probably doing a pretty good job of lobbying and educating people because there is a lot
Mhm.
of education um, that has to go on because frankly, crypto has a pretty bad name, right? So
Yeah,
there was a lot of fraud in the beginning. People lost crypto. Then you had Sam Bankman-Fried and all that. So the
right.
other thing that I've just kept my own eyes on because it's kind of in my wheelhouse is event betting is going to come.
Mhm.
Casinos are fighting it big time, but yesterday the Intercontinental Exchange put 2 billion into Polymarket.
Mhm.
CFTC has given both Kalshi and Polymarket permission to go ahead, and I think it's going to happen. There's plenty of economic research academically that shows that it should happen. Um, so that'll be something on the horizon to pay attention to, I think.
Okay. Um, yeah, so I think exploring tokenization more is a big thing. Initially Jamie Dimon was very negative about cryptocurrencies, but now all of a sudden he's come on board. Why do you think they've done that?
They probably figured out how to use it to their advantage. Before it would have just threatened their entire business. Oh, no more ACH, no more holding, crypto for 3 days and collecting interest, no overnight repos. I mean, so I think they're finally figuring out that they need to be a player in there, and so they're going to go after it. And I think the big incumbents should do that.
Mhm.
Um, the first thing they always do is fight innovation, then sue it, then try to regulate it to death, and then try to join. I think in the case of event betting, what you're seeing is you know, CME did a partnership with FanDuel. Um,
Mhm.
ICE is in Polymarket, So like, and the casinos are fighting it. What they should do is just go buy a DCM or create their own designated contract market and figure out a new way to do business that way,
Mm.
rather than fight it. But what they're doing is suing state by state, which is kind of early days, but they're going to lose.
Eventually, they have to buy it. They have to just embrace it and buy them out.
They have to, because if you think, and I don't want to dwell on gambling too much, but when you go to the book and you place a bet, who's on the opposite side of that bet? The casino.
Mhm.
So the casino is just hoping that
Yeah,
there's kind of, they set the spread and there's kind of even bets on both sides, and they take the juice and, you know, blah, 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 blah.
how they make
Well,
money, right?
in a designated contract market, they may set the opening spread, but the market then sets the spread. There's a buyer for every seller, and the casino would take a cut, just like an exchange does, off each side. So it's a
Mhm.
different way of thinking for them, and it's, I think, hard for them to think that way.
Mhm. Interesting. Well, the big trends coming. And Jeff, back in our Hyde Park Angel days, we did a lot of business services and
Yeah,
consumer services and stuff that, in a crypto world seems a little bit mundane. But what's going on in that world? Are we
I think,
seeing
yeah,
that stuff?
I think consumer products, again, it's such a crapshoot. So incredibly easy to figure out a niche consumer product.
Hmm.
Um, Incredibly hard to scale it and make it big. Um, so in Hyde Park Angels, I was an investor in Simple Mills, which just sold to Flower Foods this year for, I think it was 795 million. That was a very successful investment. But for every one of those that you do, you're going to have a bunch that fail. And they fail for a variety of reasons. And a lot of them is maybe the market is just too nichey
Hmm.
and it just can't get out of that market. And so it's really hard to do diligence on things like that. I had other ones that I did, like I did tallgrass beef back in 2005, and it totally failed. And it was just wrong timing and all that stuff. But I think you're going to start to see more and more consumer products because it's easy to get them off the ground
Hmm.
and get early traction.
Hmm.
Business services for sure, but they're all going to have some sort of AI component attached. Um, and then the interesting thing that I think a VC, she was from Chicago, I think she's in Austin now, Jackie Diamante, is investing in is infrastructure. And
Hmm.
so I think there's going to be some big plays in infrastructure because we need it. Um,
But bridge building and things like that?
More so technological infrastructure.
Okay.
So power, you know, of course, data centers and things like that, but the chips and all the hardware and stuff that go in them need to be upgraded big time. And the current incumbents aren't going fast enough. They're not moving fast enough.
Hmm. Interesting. Jeff, you mentioned power before, and I
Yeah.
wanted to explore that for a second. And, we're in a bull market, and it's becoming kind of a classic bull market where most of the groups are moving, but it's being led by utilities. I've never seen a bull market led by utilities. That's the whole energy boom, isn't it?
Yes, it is. And I think so let's just envision the future 10 to 15 years from now, which is what a venture capitalist does, right? And that's, you know, we're always sort of wrong about that. And so that's why so many companies fail, because you make bets on what you think is going to happen. And, you know, if you can only bet, if you can bet 300, you're in the Hall of Fame, but most people can't. But if you kind of look at the trends and you look at where the world's going, so we're going to have robots. How are robots powered?
Mhm.
Electricity,
Electricity.
batteries, right? Rechargeable batteries. Um, we want EVs, electric vehicles. How are they? You know, they're electric
Right.
batteries. We want driverless cars and driverless
Power.
taxis. Again, it's artificial intelligence. It's, you know, stuff up in space that's guiding these things. And again, a lot of electrical power. Uh,
Hmm.
we want quantum computing, right? Electrical power. Um,
Yeah, how about that? How about data centers? Data
Yeah,
centers.
data centers. It all goes back to the grid. You look at our grid is basically powered by coal and natural gas, with some, sort of dams and water. And we just don't have enough power. So, we need to build nuclear like crazy. I mean, and it
Mm-hmm.
takes 10 years to get one online. Natural gas power plants take about 10 years to get online because the stuff's built in China and there's back orders. You can do methane, again, not super scalable. So that kind of leaves you with solar or wind. Wind is totally unreliable. The one good thing about solar is when you put the panels up, it actually works right away and starts generating electricity. The problem with solar is how many places in the United States can you actually do that, right? So like in Chicago, it probably doesn't work. Too many cloudy days, you get snow, I mean, so um,
Mm-hmm.
we have to figure that out. Well, in the meantime, there's only one place for rates to go, and that's up. So
Mm-hmm.
that's why utilities are so strong.
Very interesting. Great insights, Jeff.
Yeah.
Anybody have questions for Jeff? Got a lot of trend ideas here and kind of future vision ideas. Anybody?
Right, I got a question.
All right, Jack.
Jeff, hi, it's Jack Walsh.
Hi, Jack.
I am curious, it seems like more and more of these big places and they're going to be offering alternatives to clients. Give us a little thought about what you think the average Joe percentage should be in alternatives. Maybe, gold and crypto have been doing better lately. Maybe they should have a certain percentage there. What do you think the portfolio breakdown is going to head towards?
It's a super good question. I think if you have a net worth of, I don't know, let's just say 5-10 million, you should be looking at alternatives. Under that, you probably shouldn't be,
Mm-hmm.
because it's just too much risk for the size of the portfolio.
Mm-hmm.
In my portfolio, my personal portfolio, at this point in my life, I'm 63 years old. I have way too much money allocated to alternatives, probably.
Right.
But I did a lot of venture investing in my 40s and 50s, and I'm just waiting for them to exit, if they exit at all. So the other thing to recognize is when you do a venture investment, you're not looking to 3x the deal, like you would, let's say, an S&P 500 deal. You're looking to demolish the S&P 500. So if the S&P 500 is long run average is 10 or 12%, depending on how you calculate it, you want to be making like 20x on your investment. You want to be in the very high percentages. So, you want to allocate only probably 1 to 2% of your portfolio to that, depending on how much risk you want to take, how old you are, because a great company in let's say the venture space is going to take 10, 15, 20 years to come to exit.
Mm-hmm.
If it's private equity, it's going to be shorter. That being said, maybe the multiples are too high in private equity now. I don't know. Somebody else could speak more eloquently about that than I could. But just going into crypto by itself feels a little naked. I wouldn't allocate a lot because it's so speculative now. But private equity, I think at least you're buying a company that has cash flow and has sort of a business. And in the venture space, you're just making a bet on the future. Um, it it all comes down for those types of alternatives to the quality of your deal flow and how good you are as an investor versus if I put it in an ETF in the S&P, it really doesn't matter how good I am as an investor. I'm just kind of surfing along and following an efficient market. I have never had any luck with hedge funds. I've been in 2 hedge funds, never had any luck with them. Just kind of avoid them. Myself, that's an alternative asset class. Real estate, of course, is another one which somebody else could talk about far better than me.
Mm-hmm.
I just It's not something I've ever done. And
Okay.
don't really understand. So, but I think, when you get into higher net worths, you need to be in uh, different asset classes like that. And the reason is because you're going to beat the S&P and you have the wherewithal to take a little more risk, but
Mhm.
you're gonna instead of earning 10, 12%, you're gonna earn 20, 30, 40, 50%. And you're also going to have some flameouts too. So that's sort of the way I look at it.
Mhm.
And it does come down to the quality of the deal flow that you can generate for that.
And Jeff, we talked earlier about the diversified alternative funds that Four Star offers, and so an investor with $1 million, which is accredited, the SEC says they can do alternatives, but with our fund they can,
Yeah,
because they can put 100,000 in and they get 20 investments in a bucket, or they buy a couple buckets
Right.
with 100 grand. So that's one way to do it. But I think you're right. Unless you
Yeah.
have like at least 3, maybe 5 million, it's hard to do individual deals
It
and
is.
be well diversified.
It is. And the thing is, like, so if you look at those 20 deals, right? Let's just say um, the typical venture math for early stage, and we're talking about sort of seed stage.
Mm-hmm.
And if you had $1 million fund, let's say, and you put $100,000 in 10 companies,
Mm-hmm.
50% of those companies are going to go bankrupt. So you're going to lose $500,000.
Right.
You don't think you are because you love all your children, but you are going to lose $500,000. Out of the next 5, 1 to 4 are going to pay 1x to 4x back.
Mm-hmm.
So you need 1 to hit 30x. If you have 1 hit 30x out of the 10, you make about a 27% IRR, and you 3x your money. So
Mm-hmm.
that's kind of the way you have to sort of look at it.
Mm-hmm.
So in your alternatives fund, if I put, what did you say, $100,000?
Yes.
So I'm really looking to get 300,000 back.
Mm-hmm.
And that's, in an ideal perspective, that's a 5-year time horizon to get a 27% IRR. The realistic time horizon is more like 10 or longer. So
Yeah, 7 to 10.
the
Yeah.
IRR is going to go down, but you can't eat IRR anyway. It's all about cash on cash return anyway.
Right. Exactly. Well, great. Well, great, Jeff. This has been great. Thanks for being with us. And Chris, I know you want to move on to some other things we need to cover, but thank you, Jeff, for great insights for us
Thank
today.
you.
I really appreciate it.
Good to see you all. Pleasure to be here. I'm going to go watch the Cubbies win now. So
Okay. All right.
talk to you.
Thanks, Jeff.
Okay, bye-bye.
Thanks, Jeff.
Were your lips to God's ears, I might add.
Jumping back. So, next we'll just look. So I'm going to show you guys the kind of revamp for the portfolios and advisor hub, and some access and capabilities there. So I'm going to do this actually one way. So let me share this. I'll go kind of soup to nuts on it, and go. So sharing. Okay, perfect. So, if you're in the SharePoint site, you can go to the advisor hub here. It's going to ask you to log in. I'm going to log in myself. And first time, I've said this before, but you can hit forget password. If you have not, don't do sign up. You are already on there. You're an advisor. All right. So if you go to investment platform, there's 4-star portfolios under there. So what's on here? So we have obviously just a little blurb about it. You guys can go, but we break a little bit more into the protection program. So between the strategic, moderate, tactical, what each refers to, what these mean, breaking it down a little bit more to hopefully give you kind of a little more definition to look into. If you go down here, you can see we actually have the current defensive positioning. We're fully invested right now. We also talked about this a little bit on the Monday call, but this does do a direct feed from actually pulls from a spreadsheet that we utilize that looks at all the different triggers and that. So Realistically, if we updated it tomorrow, it would actually should flow through to here if that happens. So this would be a place where you could actually see our current positioning as of as of right now, essentially. And if we scroll down, so we have actually, and we've seen this before. I know we've done a little more of a deep dive too, but we have a breakdown of all the portfolios on here. And you can see each one has a S if it's a strategic portfolio, T if it's tactical, or if there's combinations of both. So here you can see growth and income has a strategic and a moderate version. Same with index allocator. US sector actually has all three. And then what you can do is you can actually, let's just say, let's do capital appreciation. If you click learn more, you can actually go into it a little bit more, learn a little bit more about the fund. And then we actually have right on here if you wanted to invest directly into it as well. And you could go back if you wanted to. The other thing you can do on this, it's taking a second, obviously I just do it this way actually. Is you can actually sort on this as well. So let me scroll back down. So let's just say you wanted to see all the moderate portfolios. If you click this, it's gonna filter this for you. Let's see if you wanted to look at commodities or domestic equities, alternatives, things like that. You could filter it by that as well. You could also do by if you wanted individual stocks. If you had a client that just for whatever reason really liked individual stocks, it'll filter to those individual portfolios. So it really gives you a nice breakdown to be able to kind of hopefully filter, see what works or what you're looking for, and then hopefully learn more on that beyond that. So I'm going to continue, as I said, to add more to this. I know in discussions we've had as far as potentially updating monthly kind of our current allocation, what that looks like, things like that. So this is a living, breathing thing. It is going to constantly be updated, but we wanted to just make sure we have at least a live update on here. The other thing I do want to see if we can get some type of performance kind of feed and things like that. Obviously, we just need to make sure that we have everything kind of kosher from a disclosure and everything standpoint. So there is timing to that. So this is on there once again. When you log in, it's under investment platform, 4-star portfolios. The other quick thing I'm going to highlight, because I think it's relevant for this, in the Learning Center. So, you have some of the basic stuff on here. So we did the Diversified Alternatives Fund overview, our model portfolio overview. So we have the videos and everything up here. But if you go down to the monthly meetings and click view more on here, you can actually see, so September, obviously we're doing October right now. When this is done, probably towards the tail end of this week, I'll cut it. You can actually view the meeting for September, and you could actually watch the recording for it. We have kind of any of the featured speakers this week, things like that. So just be aware. I know we kind of discussed that it was going to be available on there. That this will be available. I know Jeff Carter, obviously a great speaker. We'll have that on there for you guys if you ever want to review it or unable to. So anything you want to add, Brian, before I jump forward?
I think that's good. Thank you, Chris.
Okay. And then upcoming revamped and managed asset and esoteric evaluation. So in the past, we've looked at several different factors, but one thing we're looking at here, let me see if I can share this. The factors we're looking at restructuring it to and the weights is a shared. Just a second, my computer's kind of clunking a little bit here. So for the analysis for funds, we're going to look at kind of two major factors. Lipper leader ranking. So this is kind of a London Stock Exchange group. It's a very broad base, but it looks at total return, consistent return, preservation, expense, and tax efficiency, ranking them 0 to 5. 5 being the best, obviously 0 being the worst. So we're going to look through these. We're going to rank them, looking at different funds where they stand up on this. And then they also have something called ETF report score where we're going to look at that. And that's going to be a little bit more analytic, looking at performance, risk, technical sentiment. So that's going to be flows within and out of these ETFs or mutual funds, things like that. So what we're looking to is to take all these, really drill it down to a single score for you. So that way, if you get like an A, you know that that fund is a quality fund. It's got a total return that stacks up versus its peers good. It has a consistent return and preservation. It's not going to get crushed, as soon as the market turns, at least relative to peers. So that's coming down the pipeline. Once again, this is going to be for mutual funds and ETFs, and we're going to probably roll it out on a fund by fund basis. We also might look at certain sectors or themes, thematic. I know I've done in the past, Bitcoin, things like that. So we might do a thematic look at different funds as well. But just be aware that's coming. And then SMAs is kind of the next thing to tackle from there, SMA providers. So we don't necessarily have that, I don't say solution yet, but that's coming down the pipeline as well. So I think the goal of this is to give you guys at least some, I don't say guidance, but if we can help narrow or help in any way with your research, or to narrow out either funds that aren't performing well or funds that are, especially when you get questions from clients, things like that, we're happy to try to do that and try to at least direct you to, hey, instead of looking at 1,000 funds, hey, here's a short list of 5 to 10, and then we know you guys can look a little bit deeper on those. Makes your guys' life a little bit easier. All right, jumping back real quick, couple things, new software updates. So just be aware, we're finalizing some updates and contract signings with these, but my rep chat, so we still are ramping up with this. We haven't even really kind of started the initial process with it, but it is going to be coming down the pipeline. So I wanted to give you guys kind of at least a knowledge or heads up on it. So currently right now, if you're texting clients, you utilize Global Relay, kind of that messenger app, and it has a texting capability on it. So we are going to be morphing the client texting capability over to my rep chat. It has a lot more kind of fully fleshed out features for texting with clients. You can do automated texting, things like that. So a lot more, I think, bells and whistles for you guys, as well as the cool thing is within the CRM system, you can have those text messages to be saved there if you wanted to. So that's coming down the pipeline. We'll do probably an individual presentation as that gets closer, and obviously you'll roll out on that. And then Jump AI, I know some of you either used it or have used it in the past. But we are doing a trial program within the firm just to test it, look at it from a perspective of compliance perspective, all that stuff. So that's hopefully towards the tail end of this month. We'll have the review kind of concluded on that with timely rollout, hopefully November, December for that. So two things I think to keep a lookout on the horizon. It's coming down the pipeline from a software perspective. And then the last thing is the 2025 Winter Conference updates. And Brian, I don't know if you want to do the intro on that one.
Sure. Yeah, we announced the conference. We're going back to Hotel Atelier. Everybody should have gotten already their invite to come. We're going to be doing more speed networking like we did the last morning at the last conference. Everyone seemed to like that, and the sponsors really seemed to like it. Everybody gets a chance to talk to more people. So this is our third time back to Hotel Atelier, and it's December 8th through 11th, and it starts on a Monday. So there's options if you wanted to come for the weekend. I'll be there over the weekend as well, prepping for the conference. But and then we leave. We come in officially on Monday, unless you come earlier, and then we leave on Thursday, right? Unless you want to stay later for the next weekend. So it should be a great conference. We always have about half of our sponsors, and they're the ones that pay for the trip, are new sponsors, right? So we always have a lot of interesting new deals. And I've talked to a number of folks about different conferences that they go to, and most of the wholesalers say they've never seen all the differing things at a conference like what we have. You go to an alts conference, you go to a fund conference or something, but we've got always an incredible mixture. We're also going to be doing some training on portfolios, and actually maybe some roundtables that will talk about how to use investments the proper way, how to diversify. By that time, we're going to have the esoteric portfolios up there as well, which include hedge funds. Jeff Carter didn't seem to like hedge funds, but there are some opportunities there, long, short, commodities, and all those things that are not stocks and bonds, but they're not long-term alts either. So we're going to talk about how folks can use esoteric models, used to be called liquid alts, and that'll be part of a feature of the meeting. In addition to all the networks that we have of different money managers that you can use as well. Like we say, we give you an advantage on the 4-star portfolios, that there's a cost advantage. We don't charge you management fees, right? The firm is already sharing in your revenue, so we don't take another fee out of you. We are going to be offering those portfolios outside the firm, and we'll charge others a fee. But all the other managers you have usually come with a fee. The only area where you can get it without a fee is the Orion, right? The Orion Communities program, Chris?
Yeah, you can get some via Orion Communities, although we're working on trying to get that realigned because issues with that. But yeah, there are some programs. I think you can even do it with Schwab, but they're kind of like they provide you the allocations, you still have to trade them type of a thing.
Right.
Also,
Okay.
there are some dissimilarities as well.
And we're always going to have some interesting money managers. Like last time we had Market Asset Management, and they're basically a buffered program, and they've got, there would be like a dividend replacement strategy. Blue Core Labs will have a lot of interesting, different types of money managers, maybe in the liquid alts area as well. And we'll talk about how to use all those at the conference too. So it's a little bit of learning, obviously updating on alternatives and funds and apps. We'll probably have Orion back there with us as well, and how to use the Orion system. And then, of course, a little bit of tequila and a little bit of pool, and we'll have some fun too. Any questions on the conference? Anybody?
But I would say sign up as soon as you can.
Yeah,
Obviously,
sign up.
better.
Yeah, sign up as soon as you can. And then
Yeah, I got a
we'll-
question. I did sign up as soon as I got the email. Will Landmark or somebody be reaching out regarding flights?
Yeah.
Yes.
Yeah, you should, I don't think Mark saw you on the list. So yeah, so if you could register everyone can register as quickly as possible, I apologize. We're not using Landmark anymore. We're using a different travel agency. But I don't believe I had you on the list of people who've registered.
I went kind of goofy when I signed up. That's why I was asking.
Yeah, try signing up. Go through the process and sign up again. It might not have submitted from the last list.
Okay.
Yeah, I don't have you on the list. I have 3 advisors who've signed up, but you're not one of the ones on the list, Mark.
Take care of that this afternoon. Thanks.
Yep. And then anybody else has any questions, let me know. You can reach out to me.
Okay.
Sounds perfect.
Back to you, Chris.
And that's it. Right. I think that rounds it up. Like I said, we are recording this, so I will, we'll get this cut probably towards the tail of this week. I sent out an email last time with a page, so I'll probably do that again. And yeah, thanks everyone for being on, and hopefully everyone's enjoying the nice fall weather we're finally getting in Chicago now, or wherever you're at.
Right. Go Cubs.
Yeah, go Cubs.
Okay. Thanks, everybody.
Thanks everyone. Thanks for joining.
Okay.